Well, thanks so much, Sarah, for coming in today.
Thanks for having me.
And today we have Sara Deshpande from Maven Ventures. So welcome. Before we dive into what you're investing in at Maven, I'd love to learn a little bit about your background.
Sure. So I've spent the last 10 years working hands-on with founders to start and scale their businesses in a lot of different ways, from helping to launch really early stage companies as effectively a co-founder and running my own business, but really more the last 6 or so years working in more of an incubator and VC capacity. So I've been with Maven for 4 years now. And prior to that, I ran the largest tech incubator based in New Orleans, Louisiana, where we'd support about 1,200 companies a year, a lot of high growth tech businesses, but also a lot of companies that are really authentic to the New Orleans region and brand around food and entertainment and music and things like that as well. And I also spent several years in healthcare strategy, which informs our investing now. And we do a fair amount in the early stage digital health space, and kind of caught my entrepreneurship bug and the desire to work with really early stage founders when I was in business school into my MBA at Stanford about 10 years ago.
Mm-hmm. And we'll hop to today in a second, but I want to actually take a step back and go back to your experience in New Orleans. Like, what were you doing there? What kinds of startups were you working with? And what did you think about the ecosystem?
Yeah, I first started spending significant time in New Orleans about 3 years after Hurricane Katrina, so a really different time than it is now. And I was in business school and searching for what effectively in my career has become now a way to work with very early stage founders at the inception of their business to help launch and scale something that would meaningfully impact consumers' lives. And as soon as I hit the ground in New Orleans and started meeting a couple of companies there, there was just a very contagious energy around what was happening there, sort of this momentum that had really built after the storm. And I knew that was a place that if I spent significant time there, I could do something that really mattered and work with a lot of early stage companies that in other ways maybe didn't have the same resources that people were seeing either coming out of business school out here or in Silicon Valley. And I also just loved the city and the community and what was happening there. It's matured so much over the last decade, and is amazing to have seen that happen. When I first started working there effectively weren't any accelerator incubator programs. The organization I worked with is called the Idea Village. They're still around and operating, and they do a ton of amazing work there, but it's really grown and scaled pretty significantly. I think there's still a need for more capital, and there's not a huge institutional formal capital pipeline there, but we are starting to now see companies that are raising from East Coast and West Coast investors, and each kind of win that happens in that market, I think, builds the pipeline in the future for more wins to happen down the line as well. So we would celebrate every $1 million raise. $1 million raise, $2 million raise was a really huge deal there, and so celebrating those year after year and kind of seeing that pipeline build, it's cool now. Though I'm removed from it, I still kind of stay in touch with what's happening there. And it's been really neat to see that community evolve over time.
And where do companies get funding from in those very early stages? Is it from angels in the local ecosystem, or do they come out here to raise? Yeah,
there's a local ecosystem there that does a fair amount of angel check. There's also a lot of either grant competition, incubator funding, free resources, that kind of stuff that wouldn't be kind of the traditional capital that people would raise here. But there are other resources that people end up tapping into, and small grant dollars, and money just goes further there. But the angel community has really evolved to a handful of angel groups when there were no angel groups, but now there are actually a few formal angel groups there that are active check writers. And then what I see is companies that have been able to scale past that are able to raise what we would consider Series A capital from other markets. There's not a ton of kind of true Series A capital there, but I've seen people raise from Texas, from New York, from the Bay Area. Yeah.
Okay. And then walk me through what happened after that. Did you join Maven right afterwards, or what came next for you, and how did you decide to leave?
Yeah, I loved the work that I was doing in New Orleans, and but personally and professionally, I wanted to be back in the Bay Area.
Okay.
So that was about 4.5, almost 5 years ago, that I decided it was time to move back to the Bay. I mean, I'd done my consulting career, I'd done business school here, I had a network here. I knew I loved that hands-on work with startups, and that the market was just so much bigger and growing still so fast 5 years ago. And I'd spent all this time understanding what founders really needed and dedicating myself to being kind of the first hands-on resource that they would lean on to gather any resource they could possibly need. I was kind of this expert resource gatherer, and figure out what do they need, when are they going to need it, and can I see around the bend to provide it to them right before it becomes really critical. So now I've been doing that for years. Turns out in the Bay Area, it's a really valuable skill set, you know, and so I knew there would be opportunity. So when I moved back to San Francisco, I launched my own consulting practice. Okay. And effectively what I was doing was exactly what I'd done at the Idea Village, exactly what I'd been doing for founders for years, but clients would find me from all over the US and say, we want to work with startups. We have a startup ecosystem here, but how do we do that? You know, we don't kind of this idea of like first do no harm. People would give such bad advice to companies. Like, you have no idea, you haven't worked with companies, and they needed somebody that had really been in the boat before. So I built a consulting practice with clients all over the US that I would help figure out how they could leverage what they were really good at to better support startup founders. And through that process, I ended up working with a limited partner at Maven, who became a great friend and client of mine. And after we'd been working out for a while, said, hey, I've got this friend Jim, and he's got a fund in Palo Alto, and maybe the two of you should go to lunch because he's thinking of expanding the team. And so initially we went to lunch to say, you know, could they be a client of mine? He was a one-man shop. He'd raised about $5 million. You know, Fund 1 ended up being a $7.5 million fund. It was about $5 million into that, and he was doing everything on his own and was looking for that first person that could help kind of grow and scale the team and provide hands-on support to startups, and also kind of grow into an investing role over time. And the two of us had a really similar kind of shared vision, the way we thought about companies, the type of things we wanted to invest in, the way we wanted to work with companies, that pretty much after that lunch, I wound down all my other clients.
Okay, wow.
I knew, so we started on a kind of a contract basis, but I knew kind of from that day that there was something that was pretty special that was happening there. And that first lunch, we actually ended up, he said, why don't you spend a day with me on the job? We ended up going to lunch with a founder who we ended up investing in. So, so you know, it's been a pretty crazy and great ride since then, but we've been working together now for the last 4 years. And I was doing still a little bit of stuff on the side at the beginning, but pretty quickly we both decided that it was going to be a better kind of longer term fit, and have been growing the firm ever since.
And these days you're a general partner over at Maven. Congratulations.
Thank you.
Tell me about that evolution, like from basically day one. You stopped your consulting, started working there, and you know the firm itself, you guys have grown your investments. How has your own role evolved over the last few years? Yeah,
in the very beginning, I was just excited to be part of something that I thought was on the ground floor. So I actually started what I would consider now undertitled, but I kind of didn't give a shit. What was it? Couldn't really say that. So I started as a senior associate, and I'm like, I've been doing this job, but like, I don't care. I think we're going to build something that's really amazing. And so I think I probably spent like less than a year as a senior associate to, you know, realizing that, that there was a lot more that I was doing kind of even above and beyond the expectations of that role. But in the very beginning, it was, I think you have to prove that you're invaluable to founders. And could I get credibility with our founders in the space that we were investing in and provide real immediate value to them? Because while I'd been working with startups before, I hadn't actually ever been a venture investor. I hadn't deployed capital. And so I think it had to start with kind of, what do I know how to do? What can I provide from day one? We used to run an incubator. So at the very beginning, it was gathering all of our mentors, our investor, kind of co-investor network, figuring out what kind of events we were going to do for the incubator, how we were going to fill that pipeline, how we were going to work with those companies. At the time, there were about 8 investments. We've since grown to investing in 32 companies. So as that scaled, figuring out how do we continue to do what we're doing, but with more companies, at kind of a bigger basis. So starting with that kind of that hands-on support role, and then over time, as we kind of learned what our thesis areas were, what was our investing strategy going to be, was able to also then look more at kind of new opportunities and think about how do we bring kind of new visions into the portfolio, how do we add new areas of interest that are beyond what we're doing today, and that takes a couple years to kind of get into that rhythm. So that was probably 2.5 years in, and then at that point saying, like, now that we've defined what we want to do and what we want to go after, actually effectively being able to lead deals and find and source companies, and also serve as kind of the primary point for Maven in those companies as well. So I think it's a natural evolution that comes over time, but starts with, can you provide real value to founders from day one and kind of learn the investing business as you go. And I would say I think I really underestimated when I first came to venture the business of venture. I have an MBA. My undergrad is in finance. It's not a surprise that I ended up in the finance industry, but I hadn't fully understood or appreciated the finance of VC until you're in it. And then you realize every dollar I put to work, somebody's expecting me to give them $3 back. And that really changes the dynamic of how you think about putting the capital to work and the types of companies you want to invest in and how you run your team and what you spend money on. And I think that has been a really significant learning curve that now, 5 years into the fund and 4 years into my role, we really now know how to operate our business. But that's been a huge piece that it's kind of unknown from the outside until you're really running it on the inside.
Yep, no, for sure. And actually, I think that's a good segue into trying to learn more about what kinds of things are you investing in? Actually, let's start with geography. You're from the Midwest and you have worked in the South and now you're here in Silicon Valley. How do you think about geography? Do you think founders can build software businesses anywhere, or do you think they need to be here? Where are you investing?
Yeah, I always joke, especially with folks in Cincinnati, where I'm from, and in New Orleans, if there's ever like $1 billion consumer-oriented company that comes out of those markets and I'm not an investor, I've screwed up. And so it's very much in my mind that I'd love to have more exposure to those markets that I know really well in our portfolio. Today we don't. Most of our investments are in the Bay Area. We do have one company in LA. We have one company in Toronto. We have one company in Michigan. So we do have a little bit, one company that's based in the Midwest, and we have a couple companies in New York. We have one company that's split between the Bay Area, and their product and tech team is in Tel Aviv, Israel. So we have a little bit of geographic diversity, but the rest of the companies are all in the Bay Area. And I think that's because we only do about 6 investments a year, and we're a 2-person partnership with 1 senior associate, and we spend a lot of time with those investments, which is why we do so few. 6 is a really small number for a seed fund, and just to be able to spend that time with them, we've just found that it's happens more in the Bay Area. Even with the best of intentions from investors and founders, it's harder to do when you're not in the same location. So in instances where it makes sense, where I think number one, it has to be right down the fairway. Like the company that's based in Michigan is an autonomous vehicle company.
Okay.
We're known in that space. We do a lot of stuff in the space. It's an amazing, incredible team. And so that truly was right down the fairway of the type of stuff that we invest in. And we could say, this makes sense for us to do this deal. And it makes sense for them to be in Michigan because the head of the company, of the 3 co-founders, 2 came out of University of Michigan and 1 came out of General Motors.
Okay.
And so they're there, their networks are there, the team's there. So I think there has to be, number one, it has to be an extra kind of great fit for our portfolio. There has to be a reason they're kind of in one of those markets. And I think, quite honestly, the bar is just higher because we know it's going to be harder to spend time with those companies. And so I think we still remain really open to it, especially in markets where we have a great network. But it has to fit all of the criteria for it to happen. So most of our investments will continue to be here. But at least now we can say we have at least a couple meaningful examples where that's not always the case.
And switching gears just a little bit, what kinds of things are you investing in? So I guess it sounds like autonomous vehicles. I know you guys are in Cruise, or were in Cruise, and that was great. What other things do you guys look at, or do you like, or are really bullish on? Yeah,
our broad thesis is investing in software technology that impacts consumers' lives in a really positive way. So what we're looking at is what will be the next major software technology companies that can impact tens of millions or hundreds of millions of people on like a daily basis. And so that's kind of the broad umbrella that we look at. It can be anything from high growth consumer software, which we do, a fair amount of that investing. The fund was built on kind of consumer software and an orientation towards that. So we still do a lot there. We see a lot of activity there. Autonomous vehicles, which we just honestly believe and knew this and believed this 4 years ago when we did the investment in Cruise, where it was a little more contrarian than now everybody thinks autonomous vehicles are going to change the world. At the time, people were like, that's crazy. It's not happening for 30 years. And so that's an area where we think that's one of the biggest technology transformations in consumers' lives. So we've built a lot of expertise and we do that. We also look actively in consumer digital health, particularly around like what a company that a consumer would know the name of or might engage with on their own. So not provider tech or medical technology, but something that really touches a consumer. So we do a lot in those kind of 3 areas and are always looking at what's that kind of next wave. So we've started exploring more like the future of food, new opportunities in retail, So things that are impacting consumers at the end game, but really powered by software in between.
In terms of stage, where would you say that you guys are? Do you do super early, I guess pre-seed, or are you looking for some level of traction? Does it matter? Are you kind of all over the seed stage these days?
It does matter, and we're really across the seed stage. So anything pre-series A is still kind of fair game for us.
Okay.
If we're going to do a pre-seed, it's almost similar to what we're talking about in the geographies. If we're going to do a pre-seed deal, it has to be something we know really, really well. And so we just led the pre-seed where we were the only investors and did the whole pre-seed round in a new autonomous vehicle company, for instance. So that's an area that we know well enough that we're able to say this is something that we can do. So in digital health, it's a lot less likely for us to do truly a pre-seed company, because with those, there's so much that to get to the seed and get to the A that it's almost like we know it too well, and so many things that can go wrong. So those tend to be harder at the pre-seed stage, and it would be more likely once we see how consumers are interacting with the product, it's more likely for us to do that investment. So the most common is we'll do a $500K check as part of like a $1 to $2 million seed round is the most common time that we invest. We also have a handful of really early, investments where we're the only investor, and sometimes we get brought in at a seed extension, which we're also open to if we see a meaningful path to kind of what didn't get them to a Series A now and what's going to get them to a Series A, what's going to change between now and the Series A. So we have a handful of companies where we've been that second institutional round, and we're also open to that.
Okay, got it. So how should a founder get on your radar? Like, where do you meet these founders, and how does somebody pitch to you?
Yeah, it's a great question. And I think while I hate to say like a warm referral, in reality, that's where most of our investments do come from. When we just broke down our numbers recently, about a third of our investments come from other VCs. Oftentimes it's VCs that passed. So we do a lot of investments where people will say, hey, we saw this deal, especially because we talk about our thesis and we blog about it, we write about it, I'm on Medium, we're on Twitter, so we're putting out there into the world the stuff that we're looking for. And so other VCs will say, hey, this struck me as something that you guys might be interested in. And we do those deals even when they've passed. And so about a third of our investments come from other VCs. Sometimes they're later and it's too early. Sometimes they're early and it's a follow-on investment. Sometimes it's a co-investor, but that's kind of one bucket. About a third come from what we call kind of the broader Maven community. So our own limited partners from folks that we've kind of met, somehow along the way, mentors. We have a great network of mentors, particularly around consumer growth. So they know that we like a lot of the stuff in consumer, and they'll send us referrals there. So that's about a third of the deals. And then the rest, we're starting to see more and more come from founders in our portfolio.
Okay.
So about 13% of our companies so far have come from founders in our portfolio, which is cool to see that happen. I think it just takes time. now 5 years into the fund, we have enough founders and they're late enough along that we can start to see that. And then another like 13, 10 to 15% come from incubators, as well. So we do a couple of, maybe like one investment a year from YC or something like that. We'll do a few things there. But that tends to be the breakdown. So if you look at that, almost all of those are really coming from our own network in some way. We also have an open application process on AngelList that we run at least once a year. We've done an investment from there. We haven't done a ton, but we've done at least one investment from that process. We do look at, obviously, like a lot of VCs, we get a ton of cold inbound emails and people reaching out to us.
Does that work?
I don't think we've done an investment from that yet. I wouldn't say we never will, but I can't think of an investment we've done from a cold inbound email. But I've taken meetings from those. And we look at and we see over, I think last time we ran the numbers, it was like 2,500 companies a year to make 6 investments. So we're going to say no to most companies anyway, like most VCs do. And so I think that's not an optimal way to get something started. But if it's something that is well researched, that makes a ton of sense, that is something that falls into our portfolio. If somebody cold emails me about an enterprise SaaS company, it's not the right fit. So that's not that's not the best way, and that's not where our investments have come from. So to the best degree that people can understand everything we've shown about our thesis and what we're looking at and what we're excited about, and if they really do fit those parameters, figure out a way to get in touch with us. And sometimes the cold email will work, but in a lot of those instances, that own network of other VCs that they've met with, or who are almost always willing to say like, hey Sarah, will you take a look at this?
And what is your process? Let's say you look at this company, and then what happens? Do you and Jim make decisions collectively or independently, or How does that work?
Yeah, I mean, being a really small team, we're all involved in everything that we do.
Okay.
So usually the first meeting is with one of us.
Okay.
And then typically the second meeting is either with the other one or with both of us.
I see.
It's kind of how we think about it. And so usually we'll flag on kind of a weekly basis when we kind of go through our pipeline and see who we've met with. We'll flag like, hey, here's one you should take a closer look at, and we'll swap companies that way, or we'll try to do the meetings together. And then from there, it depends on a couple things. If it's something that we know we're excited about, that we're going to move pretty quickly, we can get a deal done in a week or two. And so we can get things done really fast. We can help to close out the rest of the seed round. We can be the last person that comes into a seed round. So we're open to that. In some instances, we'll say, we like this opportunity. There's something really interesting here, but there are a couple really big leaps of faith we'd have to take to make this investment. And I try to be really open with founders to say, here's the leap of faith that I need to make to take this right now, and we're not going to do that. That's just too big of a question and too big of an unknown. And if you can solve for that, we'd be interested to take a closer look. And I know a lot of VCs say that, but we've actually put our money where our mouth is, and we've come back 6 months to a year later and invested in those companies. So we've effectively done that. Chariot, which was the second best exit that we've had in the fund so far, is a company I think we said no to twice before we ended up coming in on that round, because we were able to say, here's what this needs to look like for us to get excited about it.
And I think that's great that you're really that transparent.
Yeah, and sometimes the answer is, it's just not a deal we're going to do right now, and there's either too many things going on, and we've got too many other opportunities. And I think that's the reality that founders face, is there's some stuff that's interesting here, but it's just not going to happen for us right now. We try to say that to people, but usually our process tends to be relatively light and manageable for founders, because it's a seed stage and because we're a small team. So if things are moving quickly, we can get to that decision in 2 weeks. Really, most common timeline if we're going to lead something is 4 to 6 weeks to get the deal done. To be able to be in a position to close that. But sometimes those relationships go on for a year.
Yep. And so how do you get conviction then? What does it take really to be able to say, I really want to do this deal?
Yeah, I think there's two, deals come in kind of two different camps. There's a new thing that we haven't been thinking about yet that requires research and reference checks and digging into this is a new area that we're excited about, and we have to validate that everything that is happening in the company is following on with these massive consumer trends and talking to other investors, and so really building that base of knowledge around kind of a new area.
Okay. Was that Cruise at that time?
No, Cruise was kind of fell in the other camp actually, which would be something we know we want to do already, and a trend we've been watching for a while.
I see.
And we've already built up a ton of intelligence around what we'd be looking for in a team and a strategy in a company, and those we can move on really quickly because we do tend to be really thesis oriented. If something falls within one of those major themes that we've been investing time in and excitement about, it's a lot easier to say, okay, now all of the dots are connecting and this is the one we're going to do. We've met the other teams in the space, we've looked at other opportunities, we know this is the one we're going to move on, and so I think those two different paths are really different, and the conviction that it takes is really different if it's a brand new area. For instance, one of the things we're looking at right now in kind of this future of food, clean meat, that type of area is not something we know a ton about. So now we've got to say, what are all the opportunities in the space? Is this the right timing? How does the science kind of come together? So spending time looking at it and understanding that versus when something comes on the autonomous vehicle space, where we already have a sense of what are going to be the opportunities there and what would be different and new and additive there. So those are a lot easier to move on.
Yep. Okay. Well, I think those are all the questions that I have. Thanks so much for coming in, Sara.
Yeah, thanks for having me.